What's up, guys? It's Dan from Coin Bureau Trading. Today we're going to talk about my predictions for 2026. This is basically like a part 2 to yesterday's video. If this is the kind of content that you enjoy, then be sure to smash that like button, subscribe to the channel, and ping that notification bell. Before we get started, do keep in mind that nothing in this video is financial advice. It's just my personal analysis of the crypto market. Your analysis could be different, and if it is, that's awesome, because the more difference of opinion that we have, the better traders and the better investors we're all going to become. So I'll start off with a quick recap in case you guys didn't see yesterday's video. I basically explained how, yes, on a day-to-day basis, I tend to get things wrong. Some people would say I get things wrong a lot in the short term, but on the long term, what happened over the course of 2025 and even over 2024 so far in this cycle has played out almost exactly as I expected. And in yesterday's video, I showed the proof that all these kind of calls here that I had made, it was actually kind of limited to the Coin Bureau Club Discord, but this was basically like my long-term thesis for the cycle. And of course, what I had basically asked yesterday is like, well, was the quote-unquote summer 2025 cycle top, like with Bitcoin topping on October 6th, others and altcoins seem to have topped in like mid-September. Was that actually the top for the cycle, or do we have kind of like another leg left? Like basically what comes after Q3 of 2025 is kind of the idea. So I've done my best here, guys, to kind of draw out, in a similar style to what I have in this photo here, to kind of draw out what I expect to come in the total crypto market cap over the course of 2026. And the reason why you see a couple question marks here, guys, is because first of all, I don't know how big this move is going to be. Maybe this move here that's coming in early 2026, maybe it'll just be like, some small rally up here, just back up to the last resistance level, or it could be, a really nice monster rally that takes the total crypto market cap to 5.2 trillion. Somewhere in this range it's going to be, that's the best I can kind of do. And I'll explain why, I have this forecast basically for this whole video. We'll go through step by step, like kind of why I expect this. Then going into the spring of 2026, I think there's going to be a pretty nasty correction. It could even start a little bit sooner, maybe something like March, or possibly even like by the end of February, that we would have a very significant pullback in the markets. I think we would have a very nasty crash in the market. Well, basically the crypto market bottom for the bear market would probably be sometime over the summer of 2026. I'm sure a lot of you are already saying like, no, it's not possible. There's going to be a new Fed chair. He's going to print and everything. I'll explain why that's also not entirely accurate. And then basically by the time we're ending 2026, we should start to see a little bit of a rally as we head into the midterms and potentially a continuation higher in 2027 with a cycle that kind of kicks off a little bit faster than people are expecting, almost like everyone's trying to get those gains in before there's a change of presidency in 2028, so to speak. But again, this could all be completely wrong, but I'm just going to give you guys my kind of my opinion as to why this could all be completely wrong, of course, but I'll give you guys my reasoning based on the information I have today. Obviously, this could kind of change, but one of you had actually asked me to do something like this, and I figured it was a good way to kind of start off the new year, is to kind of take a look and say, okay, what do you expect for the crypto market in 2026? This is roughly what I expect in terms of, exact dates, exact sizes of these moves, kind of up for debate, whether we're going to have this kind of bottoming here in August, how deep that level will go, whether we're going to have this first leg higher all the way to 5.2 trillion in the total crypto market cap. I honestly don't know at this stage. It's a little bit too soon to say. I am filming also this video a little bit in advance, but I guess we'll take things from the top, and I'll start by repeating or reiterating that the way that I analyze the crypto market on the long term is I look, of course, through the lens of the crypto market cycle and through the liquidity cycle. And of course, when it comes to the crypto market cycle, everyone is stuck in kind of like this very strict 4-year, like 1,064 days exactly to the day, a 4-year cycle. And this is kind of part of why I had expected the crypto market to top in September or October of 2025, which again, I guess we'll see whether that's true or not, maybe even by the time you see this video. But part of the reason why I expected the crypto market to top by September, October 2025 was precisely because every single person expects November, December cycle top. And not only that, but I could even tell since the summer that liquidity conditions in November, December would be very bad from the TGA refill. Everyone assumes that it impacted the crypto market right away. That's not true. It acts with a lag. So I figured, okay, TGA refill sometime in July, give it a 3-month lag. That means going into October, November, December, that's when you start to see the market struggle. Lo and behold, that's exactly what happened. Crypto market cycle, liquidity cycle. On the crypto market cycle side, this is where, this quote unquote 4-year cycle, the way that I view it, is that again, it's possible that the crypto market topped in September of October or October of last year, or alternatively, we could see a quote unquote extension into January, February, simply because no one expects this, right? Everyone was focused on that November, December. I saw so many people saying, if it's not rallying by December, I'm selling out. So now we're past that stage, and it's kind of like, reset the playing field for a potential cycle top in January, February. So that's like, again, that's just on the crypto side, on the kind of psychology side. And again, again, the way that I look at cycles, especially after going through to this macro course last year, or I guess, well, technically a few weeks ago, but last year, after going to this macro course, I started paying a lot more attention to these kind of cycle charts that focus on phases, what phase we're in, rather than the specific time frame. Simply because this phase cycle analysis is the way that all these different that's all macro analysis, all cycle analysis is based on phases. It's not based on time. It's based on what's happening with interest rates, what's happening with liquidity, the exact number of days, how much time it is for the whole cycle or for the phases of each cycle. There doesn't seem to be a strict hard and fast rule. And especially as crypto becomes more and more of a macro asset class, I fail to see why we should be confining things and being very strict. Like, it's been 1,064 days as of October, whatever it was, 20th. So therefore the cycle is over and none of this can happen. I don't think that's accurate. And all you have to do, guys, is look at Bitcoin dominance. Logically, if it was the end of the cycle, we would probably start to see Bitcoin dominance rising, as altcoins completely go to zero and everything starts flowing back to Bitcoin. But what's really fascinating is that we haven't seen that at all since the summer of last year. Since the summer of 2025, you can see that Bitcoin dominance fell, and it's been kind of just like chopping sideways basically since August. Hopefully by the time you guys see this video, we will see a drop in Bitcoin dominance. The reason why I have these indicators drawn here is that, yes, we could see a little bit of a rally in Bitcoin dominance in the short term, but going into January, February, maybe even into March, I would expect a significant drop in Bitcoin dominance with altcoins outperforming, just simply because we do seem to be in this rotational phase here, going from Bitcoin to Ethereum. And if you guys need evidence of that, you can literally just look at the ETH BTC chart. It's been in an uptrend since April of 2025, and that suggests that, yes, as a whole, capital is starting to rotate from Bitcoin into Ethereum. It hasn't been a straight line up, as you can see, but there have been higher lows in this basically since for the last, like, whatever it is, 6 months, 7 months. So I do think that's a trend that's going to continue, and eventually that liquidity will rotate into the large caps and into altcoins. And again, this first leg lower here, you could say that we saw since the summer, that first drop lower in Bitcoin dominance, that was mainly basically capital rotating into Ethereum. That's where it came from. And that second leg lower in Bitcoin dominance, you could say, is going to be driven mostly by large caps and altcoins. But anyways, getting back to the fundamentals here. So again, from a crypto cycle perspective, I do think it's possible that we could see a top in January, February, simply because it would kind of throw people off. A lot of people have been washed out. Everything's super oversold. So a bounce in the early part of next year seems likely at the very least. Whether that turns into a massive rally, I don't know, but I'm quite confident that we're going to be getting a bounce in the January, February timeframe, with altcoins leading the way as a result of these rotational flows. So that's what we're looking at here. And of course, that just kind of is just missing the one, missing piece there, which is the liquidity side. Of course, you guys will know that the Treasury General account has started being drained over the last couple of months here. So that should start to feed into the crypto market in the new year, like in the next few weeks. We have seen the Fed also basically starting QE as of the start of December 10th. I know it's not technically not QE, but it's basically a liquidity injection. So we have more liquidity coming from the Treasury, more liquidity coming from the Fed. That is money that takes time to find its way into the crypto market. And I do expect that, again, January, February, later this month, early next month, we should start to see more of this liquidity flow into the crypto market. But there's kind of a caveat here, guys, and that's that I do think that, governments around the world, bond yields have been rising. They need someone to buy their bonds. And the only way you can convince people to buy bonds is to have some kind of crisis. I know it's going to sound like a, crazy tinfoil hat conspiracy theory. But I've seen a lot of different posts, a lot of different theories that there's going to be some big earthquake. Who knows, maybe it's happened by the time you see this video, but a lot of theories that there's going to be some big earthquake around Japan or something like that, or some kind of solar flare. If I'm just thinking about it logically, again, you guys have to remember that crises are basically perfect excuses for the Federal Reserve and for central banks to start doing QE. And it's a perfect excuse for governments to start spending and issuing more debt. It's kind of a lot of people have pointed out that it's interesting that there was issues with liquidity similar to what we're seeing, what we were seeing a couple weeks ago, maybe seeing now, issues with liquidity in late 2019, just before, we had all that stimulus, and that kind of fixed all those liquidity issues. But of course, that there was a market drawdown first. And when it comes to, a potential catalyst, whether it's something like a war or something like a pandemic, like these are all things that's too obvious. You can kind of identify who's to blame. And I think that the kind of main issue with these crises that we've had, let's say in the last few years, is that it's very easy to point the finger and say it's that person's fault. And what that basically does is it results in a erosion in trust in institutions and in leaders. So if I was someone who was in power, it's like I need a crisis to basically create an excuse to stimulate. I need something that's very hard to say, you can't prove that, like, oh, someone caused an earthquake on purpose or someone caused a solar flare. It's like, it's literally impossible to prove. And even though there's people who've been tracking this now for months, even I think for greater part of a year, and people who think that, yeah, like I think that this is just an excuse. I think this is like a planned thing. No one is going to believe that, right? They're going to say, no, it was just not some natural disaster, some freak thing that no one could have possibly predicted. All these people, maybe they'll all be banned or whatever, right? Like we saw during the pandemic, all the people that were pointing out that, hey, this doesn't make sense. And like, hey, whatever lab stuff, right? All those people were kind of banned and blocked. Wouldn't surprise me if we see something similar here, that we get some kind of freak natural disaster, all the markets fall, government starts stimulating, and people are like, oh, we couldn't have possibly seen this coming, and it definitely wasn't our fault, right? Again, this tinfoil hat take there, but I expect some kind of trigger, some kind of you could say crisis, excuse, whatever, that basically causes capital to flow out of assets or out of equities like stocks and into bonds, so that governments can recapitalize, so the Federal Reserve and central banks around the world have an excuse to start stimulating again. They desperately need that, basically, because there's going to be a liquidity drain in 2026 with all the debt refinancing, and you can't just admit and say, yeah, we have so much debt, things are just not working anymore. They need to have some excuse to point to say, hey, it wasn't all the debt that we needed to refinance, it was that something happened and we needed to print. Like if I had to bet again, like I would actually bet on something like that happening. Is it going to be an earthquake, solar flare? I have no idea. I think that's a little bit, it is a little bit out there, but some kind of crisis, some excuse, something to point at, some, cause, some trigger to kind of paper over the fact that AI is in a bubble and like whatever. I definitely think something like that is coming, and who knows, it could happen sooner than people think. But that's kind of what I expect with this bar here. And of course, that brings us to the summer of 2026, which again, that's when we're going to be getting a new Fed chair. And I'm sure many people are saying, oh, the new Fed chair is going to be super bullish, they're going to stimulate. But if you actually listen, guys, to the people who are candidates for Fed chair, you have to listen to this very closely. Well, first of all, they're like, they have a high allegiance to Trump, which again, like Trump, what people don't understand is, when the Supreme Court strikes down the tariffs, which is another thing, is kind of like a macro catalyst that's probably going to happen also in February, in January, February. Maybe it'll even happen by the time you guys see this video. But the Supreme Court is probably going to strike down these tariffs, is going to result in even more of a rally and like more liquidity drain out of the Treasury general account, because it'll all have to go to these corporations and everything. But when those tariffs are struck down, you have to ask yourself, what's the other weapon on the table that the Trump administration can grab to kind of coerce countries to do what they want? And of course, the biggest weapon you could argue is the US dollar. And I actually I'm pretty sure I'm the one who said this, and I can't remember where I said it, but I said something along the lines of, like everyone talks about like nuclear bombs being like the biggest weapon, but no one talks about how the guy who presses the nuclear bomb, he's being paid money to do it. So, no nuclear bomb buttons get pressed unless people are getting paid. And that tells you that money is the most powerful weapon. The currency is the most powerful weapon, not any, because currency is what you can actually get people to do these deadly things, right? It's pretty interesting if you think about it that way. Basically, when it comes to the Federal Reserve, one thing that people don't understand is, first of all, that many of Trump's picks, like, yes, they're willing to cut interest rates, but they also want the balance sheet to basically reflect Treasury issuance. And what that means in practical terms is they want to lower interest rates on the short end. They want to cut short-term interest rates, but they're going to allow long-term interest rates to rise. And that would actually be bearish and not bullish for the markets. It would be bullish for the government, because the government can issue debt in the short term, but anyone who's, mortgages and all, and like companies and whatever, anyone who's borrowing on like at an interest rate closer to the 10-year yield is going to get wrecked. And like, again, this is, if you actually listen to the interviews with these people who are going for these positions, they all have the same thing. We're going to cut rates, but we want the balance sheet to normalize. And that means higher long-term interest rates. And that's one thing to keep in mind. Second thing, this is something I had mentioned before as well. Highly recommend listening to this interview here with this guy from Deutsche Bank. He's basically a foreign exchange researcher. And he basically pointed out something that I also mentioned before, and that's that the Federal Reserve, with someone who's in there who's loyal to Trump, I guess this ties into the whole weapon thing. What they could do basically is they could restrict these currency swap lines. Like, I don't know if you guys know, but basically central banks and like countries around the world, basically they all need dollars, right? And one way that they can get those dollars is through currency swap lines with the Federal Reserve. So for example, the European Central Bank swaps euros with the Fed for US dollars, and then the European Central Bank gives those US dollars to people who need it in Europe. Like, just I'm giving a very simple explanation here. What's interesting is that historically, the Federal Reserve has refused to do these swap lines with countries that are considered hostile to the US government. So consider a scenario here where someone who's loyal to Trump gets into the Fed, which is basically guaranteed. And not only do they basically start allowing long-term interest rates to rise, but they also start restricting basically currency swaps to foreign countries, and they basically start restricting US dollars as a means of basically coercing countries and saying, oh, you want these US dollars, then you have to do what we say, similarly to what Trump was doing with the tariffs. Because again, once those tariffs are gone, he's going to be thinking, what's the other weapon I can grasp? And as I was just mentioning, is like, number one weapon, US dollar. You can say, well, the Fed under my leadership will not give you the US dollars that you need, and this will cause the US dollar to spike, and that would cause assets across the board to fall. That would kind of be, you could say, my base case for what would happen here over the summer of 2026. And of course, again, question mark, because of course, that's a pretty in-depth, some people will say also like a tinfoil hat take, but I wouldn't really say so, guys. Like, again, just listen to the interviews with these guys. They've all said they want long-term interest rates to rise. So that by itself is bearish, because they want the balance sheet to normalize. That by itself is bearish. But then this added tail risk here of like, US dollars being restricted in currency swaps, that's a real risk. And that's something that would definitely also be bad for the markets. The last thing that I would mention as well is that, there is going to be the midterm. So there will be huge pressure on the Trump administration to basically juice things up going into the end of the year. So I'm not denying that. Like, I do think that once we're, again, heading into the September-October period next year, we're probably going to see a little bit of a rally. The only caveat, though, is that there's one tail risk to watch in the back of your head, in the back of your mind, guys. And that's that, again, I guess going back to this whole idea of like there being some kind of crisis, part of the reason why there would be some kind of crisis and all this stimulus and everything is not just to pump up the markets or like, repay debts. It's also to allow governments to basically spend the money they need to basically reindustrialize and to boost the economy. This is something I talked about in the recent kind of video about the ISM and Raoul Pal and everything. You should watch that video if you haven't already. But anyways, again, like part of the reason why it's not just for debt refinancing to create some crisis and all the stimulus is also to actually have some economic growth. And if I was in China's shoes, again, I'm just kind of thinking more of like a tinfoil hat now, but if I was in China's shoes, I can see that the Trump administration is juicing up the economy with all this, like stimulus, and the U.S. economy is growing, the markets are going up or whatever. It's like, well, how can I really, mess things up for them? And the way they could mess things up is by basically invading Taiwan or something along those lines. In my view, especially likely if the war in Ukraine is over and if the U.S. is focused on Venezuela, there's been a lot of chatter from different analysts that maybe the agreement is that the U.S. gets Venezuela and China gets Taiwan or something like that. Again, that's a little bit like outside of my remit, let's say, but I do think that's something that's possible and something to keep an eye on as a tail risk here. Again, if you think this whole earthquake thing is pretty crazy, then just keep in mind that I'm pretty sure there was even like a memo put out, and some people say it was like fake news or whatever, that a memo was put out by Xi Jinping once upon a time that by 2026 they want to take Taiwan. And I was listening to one macro analyst guy who's like into geopolitics, and he was saying that China was actually going to invade Taiwan in 2025, and they called it off for whatever reason, which is a little bit questionable. But point being, especially when you consider, guys, that China's economy is in really rough shape here, it would be very kind of a one way to kind of get themselves out of this conflict would be to have also some kind of war or something to get the population united and whatever in theory. But maybe they're seeing what's happening in the West with the war in Ukraine, and they're thinking, okay, well, maybe trying to get people to go to war is not a good way to unite people. But anyways, long story short, this is basically what I expect. Definitely some kind of rally going in here into January, February of 2026. How long that rally is going to last and how big it's going to be, I honestly don't know. I would say at least a couple of months, especially if it's a sizable one from the lows here. Going into, let's say, I don't know, into the summertime, I would expect to see some kind of drawdown either as a result of a, manufactured crisis or a completely natural, totally not manufactured crisis. And then into the summer, new Fed chair getting in, people initially being very hopeful, but then the Fed chair immediately announcing, for example, that, oh yeah, we're going to start doing balance sheet normalization. Markets basically hit an even lower low. Maybe we even see like some China FUD, like, coming out that they're potentially going to invade Taiwan. Because to my understanding, that's kind of like you're approaching the time frame where they would potentially be preparing for something like that, would be around the summertime, I believe. Please fact check me in the comments if that's not the case. I'm not brushed up on that. And then going into 2026, into the midterms, the Trump administration is going to do everything in their power to pump things up as much as they can. So we should start to see some signs of recovery going into the end of 2026. That would be my guess. But again, if there is some like invasion of Taiwan just before the midterms, then yeah, like you can completely forget about this other rectangle here. So if you had to ask me, it's like, which of these calls here are you the most confident on? I would say to have a bounce / rally in early 2026. So over the next couple of months, going into, let's say, Q2, Q3 to get a drawdown. And then after that, I'm going to have to wait and see because I still don't have all the data around liquidity. And especially if there is some kind of crisis that results in some huge, excuse to print and debt refinance, then I do think that we could even see, something like, going into the end of the year, you actually get a pretty sizable rally into the midterms, because you're gonna have all that stimulus going in, going out rather, and like, stimmy checks and all this type of stuff, right? So something like this, and you could even draw like a cheeky trend line here. You could even draw a trend line like this or something and say, that's what we're going to see here, is like, this is the real support line. We're going to get a rally here, and then we're going to get just like a massive, if we're going to get a massive collapse below the support line, and then like almost like this very like almost a V-shaped recovery, and then retesting that support line from the downside by the end of 2026. Something like that. It wouldn't be out of the question, but in terms of a pattern, in terms of structure, this is roughly what I expect over the next year. And I'm very keen to hear you guys' comments. And while you're down there, then do check out the link in the description if you're trading crypto, especially this top one here, BitGet up to 50,000 USDT deposit bonus. Just click on this link. It'll take you to a page that looks like this. You guys will notice that the Coin Bureau does have a partnership with BitGet, but on a personal note, I'm a huge fan of BitGet. I use them personally. That does not mean you should be keeping your crypto on BitGet or any exchange for that matter. Always keep your crypto in your personal wallet. Only keep crypto on exchanges that you're actively trading. Contrary to popular belief, BitGet just does not just have futures. They also have spot trading, tokenized stocks. They have on-chain trading. They have AI trading, a whole bunch of different features, and it's completely free to sign up. So just create an account, see what they have there. If you like the features and you do enough trading volume, then you'll be eligible for some of these deals here, which again is up to 50,000 USDT deposit bonus. Not too shabby at all. Anyways, guys, if you did make it this far, and you did find that information helpful, then be sure to smash that like button, subscribe to the channel, ping that notification bell, and I'll see you in the next one.